Good morning, everybody, and welcome to the Market Meltdown edition of the Daily Plan. Now we kind of do have markets in turmoil. Okay, so let's see what's going on here. As you can see, we dumped hard, about 1%. Technically, this is the bottom of the expected move as measured at 5 a.m. Under the bottom of the expected move, or a little, more or less at the close yesterday. So WTF is going on? Well, best I can figure out, let's take a look at the culprit. And there he is, silver. Let's take a look at the cousin gold. We can look at GLD now. We need to see GC. Where's /GC? I might not have it on my, well, you get the idea. Oil, I think, is doing something funky too. The oil popped. So let's just, was this gold volatility? All right, well, good morning. All right, so we're trying to see what's going on here. We're getting a nice little bounce here. Might be a time to grab a long trade. What do you think? Do we think that this is overdone? All right, let's grab a quick, just a placeholder for now. /MES, just a 1Z placeholder. All right, that way, at least I have a reference point. Okay, so here we are. So what happened? From the nearest I can tell, and that may be a bad trade. That's not investment advice. That's a one little baby MES. It's not a real trade. Okay, so, oh, look at that. We hit the EM bottom. So what's going on here? It looks to me like the robots are in control. There's been this mechanical, systematic rotation unwind. So as I was saying, there's been this mechanical, systematic rotation unwind, the de-dollarization trade, the growth versus value trade, the software trade. All these fractal trades are unwinding, doing whatever they do. The machines are in control right now. That's kind of what I think is going on. On top of all that, let's take a peek like that's not enough. And Nomura has a note about it. Everybody's talking about it. So everybody's talking about it. It's probably crowded and closer to the end rather than the beginning. Same thing with the IGV software SaaS trade. That's unwound so much till like we're back at COVID, we're back at some crazy levels. So, if you don't catch the bottom, catch the middle third of the move when and if it happens. Okay, so I don't know how to blow this thing up any more than it is, so we're just going to deal with what we got. So this is the term structure, and this was yesterday's close, so it might be a little distorted, whatever. But the main takeaway, and we've seen this for a while, I think I've posted it before. We have a kink in the curve, kind of backwardated here. On the 13th, what's on the 13th? We have GDP and whatever, CPI. We have some economic numbers. Now we kind of go back to normal. We have this sawtooth pattern on the curve near term. Well, near term being out into March, basically, And then we resume a somewhat normal shape of the curve. Somewhat normal. Still a little flattish, but okay. So we have, so this is stress in the system that gets wound up until it gets unwound. And then we get those huge moves up, huge moves down. I can't tell you when it's going to unwind. Could be soon. I can't tell you, we can only go with the data we have. Let me show you this, and then we'll get to the SPX for a second. Good morning. All right, so I want to show you this. Now, this doesn't, for some reason, TradingView doesn't give me accurate VIX 9-day numbers. It gives me accurate-ish. So we're going to go with accurate-ish. Accurate-ish is yesterday, the VIX 9-day hit 22. Now, if you look at the crosshair over here, you see the VIX was at 20 and change, 21. The VIX high yesterday was 21-ish. Actually, it was higher, but whatever. TradingView just doesn't give the same numbers as Thinkorswim. And this was at 22 and change. What does that mean? That means short-term stress. That means the VIX 9-day, which takes into account this Friday, i.e. tomorrow, and next Friday, has more volatility priced into it than the 30-day forward look. And the 30-day forward look is go project yourself 30 days forward on a calendar, go the Friday before, the Friday after, and that's what's being measured in that. VVIX is spicy, but not as spicy as the VIX 9-day. Now here we have, once again, the VIX futures, which we were talking about this, Val, had a 20 priced into it in March or February, March, all along when you looked at the VIX contract prices. And here we are. But VIX and the VIX futures should not be the same price. This should be 1.5 points, 2 points lower, 3 points. This should not be. So looks like VIX is overpriced compared to this. Unless VIX is going to 22 and this is right. We don't know yet. Okay, that said, oh no, I know Val needs to leave soon, so let me, if you have your stuff ready, I just want to show everybody one more. So in correlation with,
yeah, 5 minutes and I'll be ready.
Okay, so good. I'll talk for a little more. Okay. Now, if you remember, we were talking about correlation being too low. It was down 7, 8, and now it kind of spiked yesterday to 15. What does that mean? That means that's rotation. Let's just call it rotation. Let's keep it simple. Okay, so that's beginning to unwind. I have a chart here somewhere comparing it. Maybe we'll get back to that at this time. I can't go through everything I look at in a short broadcast, especially since I don't have it organized. Oh yeah, we've been looking at this every morning, so let's look at this. Still not at the bottom. Let's see, where do I have that? I'm not sure where I have it. I'm not great at keeping this shit organized. I open up a tab, I never close it. I'm afraid I'll never be able to find it again. A techie, I'm not. Okay, so yesterday, interestingly enough, let me show you this. During the sell-off, whatever, vol-I, surface volatility lifted, whereas TDEX tail actually went down, and SKEWDEX, once standard deviation, kind of popped a little bit and went down. So it's more near the money surface stuff that's going on versus the tails. When I looked at the VIX decomposition index earlier, I couldn't get the, I'll have to find it when he does it. I couldn't get the site was down. When I looked last night, not over a period of time, not surprisingly or surprisingly, tail was actually down. It's sticky strike and parallel shift that's shifting. So part of it is fixed strike vol repricing. More of it is just the whole surface repricing rather than reaching for tails. So there's still potential energy in the system that can either unwind or blow up. Being a perma bull, I'm favoring an unwind to the upside when, not if. Now we have the Iran war coming up. Now that the war with Greenland has been settled and we managed to pull out a victory. So that's what's going on here. Val, let me know what's going on. In the meantime, let me
I'm
get
ready.
something. Are you ready? Okay, good, perfect. I'll take this off. Go ahead.
Okay, let's do it.
Oh, you're
Okay.
doing that. Okay. Go ahead. Ready when you are.
Okay. So good morning, everyone. We are February 5. I'll go over the usual steps into the analysis, but I want to start with the NASDAQ, specifically the NASDAQ 100. The NASDAQ nobody follows that anymore. So Qs, basically what's going on is that what's pulling the market is more the tech sector. So obviously you're all aware of that. Yesterday, we hit the largest spread, intraday spread between NQ and ES that we did for the last, I would say, 60 days. At the peak, it was 1.5% between them, which is, I follow those, so I can tell you that is like 95, 97 percentile of the last 60 days. And that basically conveys the notion that they are exiting the technology sectors, and there's some panic there, and and then going into other sectors. We probably talks about that. Now, the thing is that the gap has a limit. So assume we go back 2 weeks on the NDX, right? And the SPX goes back only 4 days on the daily chart, yeah? So there is a limit to how they can spread apart until the world doesn't change, but there is a limit. Now, I suspect the NASDAQ will hit some type of bottoming between this week, right? Might be today, might be tomorrow, but we are, it's running too far, too fast compared to the SPX. And money is rotating into defensive sectors and more old economy sectors into the SPX. So it's not running out of the market in total, but it's shifting. And that shift means you have buyers in one, sellers in the other, and there's a limit because there's a lot of cross dual listings of companies in both indexes. So be aware of that. Specifically today, 607 QQQ is a level I would recommend to put an alert on. If we somehow reclaim that, the market will squeeze up both of them, yeah? As of now, it doesn't seem probable, but anything can happen. And I'll also show some suspicious evidence of positions which are very bullish on the Qs and shouldn't be there if, based on how this thing is dropping, it's a bit strange. But let's start with the usual stuff. So the open interest layout, the first chart here, the market starts being call dominated from 69.25, right? That's where the blue line and the red line are above zero, and all the bars, the green bars are larger than the purple bars. So that's like where the market starts to be call dominated. Now, I don't know if you notice or not, but we are struggling for the last couple of days with these levels. 69.20, 40, we haven't breached them for a couple of days. So these remain, this 69.25 remains like a line in the sand type of. This is true for the last 3 days, including today. So under that, the market has the main volatility strike where the calls and puts are almost identical, like a straddle, is 6,900. Under that, we have a bit of support here with this in the money call at 68.90. But under that, it's all put dominated, very little calls, large put positions. So we need to be aware of that. The upper part of this chart where it says expectations, if you're following the stuff I show, this is generally tilted to the right, always above spot. Today, it's actually tilted to the left, below spot, with max expectations at 68.70, which depicts correctly the bearishness of the market. So this thing can tilt left and right. Generally, you see it above, but now as there's more and more demand for the put side and a more pessimistic view, so this knows how to also tilt to the left. In terms of how the gamma concentration from a naive plain vanilla open interest, if you look at the right side of the chart, then you can see that the highest concentration is the 6900, of course, and then under that 6850, we have, that's the most right column. We can see that more dark green down there, right? Everything is negative in terms of net gamma. So, and it gets positive
Is
only
that
from
0
69.
DTE you're looking at, or aggregated time period?
This is 0 DT. 0 DT. Now, when you look at the SPX, it's very similar to yesterday. If anyone listening was here yesterday, I said the market will be mean reverting. It will go up, then down, then up. That's pretty much what it did. But I think the way the Nasdaq is now getting more and more momentum and traction, so it's so to speak, its physical mass is increasing, and it can pull the SPX more than it did yesterday. Okay, so but still the configuration in the SPX is not as negative as it is in the Nasdaq, and this can be seen here with this red chart, where you can see that the red line doesn't develop any momentum. So other than from 69.40 and over, which it goes ballistics, obviously that is where the upside is hedged. You can see that it's pretty subdued and fluctuating around the zero, which shows that there's no real structure to generate like a real trend. And if anything, it will just, if it's up to the SPX, it will go down then up. Now, the interesting level here is around the 6850. That's basically, when I did this, this was around, I guess, 4 a.m. Eastern. So at that point, the market was, I think, 6880. So this level around the 6850, where you can see the red line above zero, it should be below, as it was under spot. That is like an important support level in terms of the expectations of the market. It doesn't see this level break. So if it does, you'll get heavy hedging to the downside, stop losses, stuff like that. Now, it will do so only because of the Nasdaq. Otherwise, this graph suggests that if the Nasdaq were closed today, nothing would happen on the SPX. It would just wobble around up and down, maybe go to 69.25, close at around 6,900, which is kind of interesting because obviously everybody's aware that what's pulling the market down is the Nasdaq, and it didn't recover yet. So it's kind of interesting how they stay pretty much carefree or careless about what's going on. So that's another portion of the analysis. Now here, the model which I call Candy Wrap, which shows the compression of how the various volatilities lay out, so to speak. So I call it Candy Wrap because if you notice, the bands get compressed. In this case, from 69.40 and above, they get compressed. It's like you wrap a candy with the paper. So what's interesting today, contrary to what we saw here, which pretty much says that nothing is going to happen today, here we see another picture. Here we see it's open-ended going down. There's no compression. Generally, it looks like a candy wrap. So it's twisted above, in this case, 69.40.50. You can see the bands compress. And then there is a level, generally to the left of the chart, which it gets compressed just as much. Today, it's open-ended, which is interesting. It means there is some awareness to the downside in terms of risk. It doesn't necessarily have to be as clear if you look at positions or stuff like that, but there is something in the vol structure between the various DTEs, specifically between today and tomorrow, that suggests that there is some cautious there, and hedging, open hedging, rather than put spreads. It's more like just long vega to the downside. This is what this this chart shows. Now, putting it all together, before I show you something on the Qs, again, this was done around 4 a.m. Eastern, so a couple of hours back. Market was 68.86, and I drew some potential paths that seem to me logical. The upside being the less probable, but you can see those paths also. So we actually did what the orange yellow shows. We just dropped down. Again, the VIX level, which I mentioned yesterday, I think in my eyes, as long as we are above 17, there's no doubt this market goes either sideways or down and doesn't recover. But if we were to drop 17, I suspect that would happen if the QQQ would reclaim 607. If those happen, then we can get a very sharp correction like we did 3 days ago, I think. But until then, market will just, NQ will just continue pulling things down and maybe break some stuff. We'll see about that. Now, talking about the Qs, I want to show you something here. 1 second. I think it's here. Okay. SPX, before I go to the Q, SPX, we can clearly see that if the market were to drop really hard, we get very strong support on the panic side around 67.70, 67.80. These two spikes here on the put side under the current spot, you can see they become positive. So there is something there that suggests
there's
that
a large put credit spread there.
Yeah, so if we were to get there, we'll get probably a pause, maybe, and maybe that will be the low of the day. Obviously, we'll see when it happens, but it's pretty clear and pretty aggressive down there. Now, in terms of skew, we can see that they are coming in. They're basically hedging starting from around 68.20. We can see this hump in the skew, right? There's a lot of pressure around the 68.20. That's what I'm seeing in my models, indicating that that is pretty much where they want to be net short or just hedge the positions. That's why the skew doesn't go from left to right in a shape that we're used to see. and has this hump here. So it elevates into 68.20 and then it flatten out. So 68.20, that level has hedging pressure going on right now. And now back to to what I said about the Qs. What's interesting here is 607 is a clear line in the sand. Puts start building up from there. There are none above, but there are in the money calls, which are overwhelmed, but the puts, that's not the point. The point is that for some reason, and this was not here the last couple of days, even though I didn't show this generally, today it's pretty populated. 608 and above, it's pretty populated to the upside, and kind of strange in terms of the downtrend of the Qs. So this is a bit suspicious to me. Now, I'm short the market as long as the Qs, I don't care about the SPX, as long as the Qs, specifically today, yeah, maybe tomorrow, as long as the Qs don't reclaim 607, I'm short. But if they do, I would expect some type of upside move, whether it comes from some, cooked coordinated news or Iran or monetary or whatever. 607 should be on your radar with alerts. 30-minute bars, 1 hour bars. If it's been reclaimed during the session or after the market, be aware of that level, because what is pulling down the market is the Qs. And if the Qs recover, then the SPX, which is not so participating, it's not so happy participating to the downside, will find the reason to bounce. And I think that if we were to reclaim this 607, we will then either together or just following that, we'll see the VIX drop to 17 and something will happen. Until that time, I'm sure the market, it's pretty stretched. I expect the bottom of the Qs either today or tomorrow and a bounce. But nonetheless, 607 is on my alert list and an important level. I recommend you guys have it too. That's pretty much it. Thank you, guys. Good luck. I have to go on another call. Bye-bye.
Thank you, Val. And let's remember that news trumps, no pun intended, all of this stuff.
Sorry, come again?
Now, news or whatever can wipe out a lot of lines or whatever. But the lines are there and they have to be hedged, they have to be respected. I'm saying that to say this, with whatever's going on in the mechanical cross asset delevering, the rotation trade, the out of SAS software trade, the out of Q trade, combined with what's going on in the de-dollarization trade, so-called. Let's get to the de-dollarization trade. We'll just use silver as a poster child.
Anyways, I apologize. I need to go. We'll catch up tomorrow. Thank you.
Okay, thanks.
Bye-bye.
And it's the silver tank, it's the gold tank, it's whatever, there's a lot of cross-asset algo shit going on over here. And until this clears out, this is what happened last Friday with the silver dump. This is second leg down. Second leg down stuff could sometimes echo more than the first leg down. So what I'm saying is I have very little visibility until this shit clears up. What I do see, what visibility I do have, and we're going to look at that in a second. Okay, so let's get back to option depth and see what we can see, what we know. Now let me just quickly put markers on, see if anything happened in the pre-market. Not really. Looks like some of these shorts ports. Okay, I need to go a little lower here on this to see what's going on beneath. And we're going to look at depth view. Let's go all the way down to 67. 35, that sounds like far enough. Okay, so right now we're in this clump, 67.90 to 68.35. That's positive gamma, but it's small. It's, 1,000 contracts, 300 contracts. So this is nothing. This is not enough to stop whatever's going on here. It's just not. It's going to have an influence, but it's not. I'm not sure what's going on with VIX because I don't have it on my little board here. But actually, I can look at VIX. We can go back over here and look at VIX real quick. VIX 21. So VIX is still spiking. And my read on the VIX level that we get relief, at least a relief rally bound, maybe not a new all-time high, is a little different than vols. My read on where we get that is, I'll tell you right now, not rocket science. How we saw it yesterday. 18. We don't need 17. 18, even 18.5. 17 would be a gift, 18, 18.5. Here's the 20, negative gamma. We're got pulled up there. We should stall out up here, but it's a small shelf. And we got these 22s above it. So we're in a kind of nasty zone here for VIX. And there's the bounce. Okay. So with the visibility we do have, what's the plan? The plan is 68.30 and lower should hold, quote unquote. Well, that's kind of the sticky mess we're in right now. Let me get rid of the tails so we can kind of look under the hood. The markers. Markers that shows. Once we get over 68.30, I'm not sure where we are right now, we come into this put-dominated zone, but small, negative gamma, which is a two-way ladder. So we could fly up to 68.95. We could stay bouncing this whole zone. A little bit of a notch here at 6,900, 6,905, nothing to write home about. That's a long way off from where we are right now, but a VIX of 2021 implies a move of what, 1.2%, we'll call it 1.25. A 6,900 S&P makes that 100 and whatever points. So that's within the expected move and beyond, really. If we could somehow miraculously get over 6,900, now we've seen miracles these last few days, then 69.15 is our next target, 69.20. We get into this zone up here between 69.20 and 69.45. Positive gamma. So stall if we get there, if. And then kind of 69.20, 30, 45. 45 is sold calls a bridge too far. Now, where are we at? We're at about 68.25, I'm going to guess, just glancing at my ES chart. Oh, okay. We're already kind of coming out of the toilet. If we can stay above this, so that's kind of, we're doing this real time, folks. We can stay above this, which we are, climb this ladder, 75, kind of like right below where we close. That's my inflection point for today. We were above it, now we're below it. We can maybe climb this ladder back up. It depends on what goes on with volatility, depends on headlines. This whole rotation thing seems a little overdone, but you know, they load the boat on one direction. You know, it's evolution at the speed of thought. You think of evolution, we use it as an analogy, what's successful replicates, you know, so like the human brain replicates or whatever, you know, whatever traits are desirable replicate. Well, evolution at the speed of thought, algos that are successful get replicated and copied, algos that don't. Like go on evolution again. Boats. Those guys that built boats and canoes and they came back, those designs got copied and we had good boats. The boats had sunk, well, they didn't get copied. And so that's what's happening now with these algos until we get new algos. Andrew Lowe, L-O is the name, Evolution at the Speed of Thought. Good book. Anyway, I digress. So here we are, 68, 80-ish, and that's kind of, you know, that's kind of what we need to see. You know, here's where the stall is. Let's take a quick look at depth view so we can kind of see a little more granular way what's going on here. So this is what we're in right now. Pretty, not big numbers, but a solid base. Now, as we've said many times, we meaning me, a vol spike makes the positive gamma or the negative gamma, doesn't really matter, stretches out the volatility curve. And I have a little lesson in my Discord, which just basically means that the hedging is less sharp. Instead of seeing like a sharp point of where the gamma is, where the delta is, you're going to see a long mush tail like that rather than like this. And so things can slide all over the place. If not, you can just take my word for it. That's what happens. We also have this stuff in there for tomorrow that should help. So we may not break. We may not break. Where the calls show up, the calls, you have a couple calls at 68.50. The calls don't really show up. It's Thursday, so it's kind of a thin day. We have call sellers all the way up here, at 45. 30, we have some call buyers, whatever, but so we have to see what comes in the morning. We have to see what comes in. Local buying and selling right near spot can change the picture dramatically. Go ahead, Ben Ambre. What do you got for us?
Just got let into my office, so my charts aren't ready. Don't want to give an analysis until they're done, but I'll be posting them in the Discord for the next 5 minutes or so.
I'll take you guys down the rabbit hole a little bit more.
One thing I will say is I don't think downside is down. Just right out the gate, I'm targeting 68.15 on ES before any decent upside move.
That's another 35 points, which basically means we undercut 6,800 SPX.
Yeah.
Just translating it to the SPX.
Once that happens, then I'm excited for a decent relief, not just 10, 15 points.
Okay, for one of those 50, 100-point rips.
Yep.
While we're doing that, I want to pull up Gamma Edge to take a look at the Qs, because clearly the Qs are the epicenter here, or one of the epicenters. And I don't really give a shit about Lily. Somebody asked about it, so I took a look. So again, put dominated, no surprise. This is all expiries, I think. I'm not sure. I forgot how to use this. How do you use this? I forgot. I used to use this all the time. Let's just kind of get whatever's near term. Let's just get till the end of the month. Good enough. And so that 600 strike, let me make it a landscape view. Here you can see what's going on here. So here's what's going on with the Qs. It gets buried under all these puts. So 605 seems to be the level on multi-days. I don't even see where calls show up here. Maybe they're in the 0 day that we just look at the 0 day. Let's see what's going on. 0 day, there's nothing there. Let's look at call OI. Yeah, there's 4,000 calls here, small OI at 05, 06. So here's, so we need to somehow get over that. Let's look at Friday real quick. In the Qs, nothing really much going on. Let's look at the monthly while we're here. You got 14,000 calls at 600, 73,000 puts. Weight of the evidence is way down there. So yeah, kind of like Val said, until the Qs can get their act together, how do you do so? Oh, select all, good, there you go, select all. Until the Qs can get their act together, Gamma Edge has 60, has 59, 5956. That's kind of where the murder should end. At 608, that's kind of where maybe we can get some traction north. Okay. All right, so we closed out at 68.82. We're around, where are we now? We're at, let's get back to the chart. We're kind of hovering right at the EM bottom, which I'm sure it's not the EM bottom anymore. Let's get back to here. So, whoops, wrong thing. All the headlines, the software meltdown headlines, the buy to dip narrative is starting. Carter Worth was on there yesterday showing the divergence between the semis and software, whatever. So when that narrative takes hold, it takes hold. But despite the way the market's been looking crappy, value posted surge largest day of outperformance versus growth in history. Advanced decline line with six advances to 4 decliners. Even in the S&P, the advanced decline line was positive. I already talked about VIX topping at 21 and the VIX 9-day at 21.9. Yep, near-term backwardation. Term structure is kinky. Hey, don't let your mind go to the gutter. And I talked about the kinky term structure before. Where's the kinky term structure? The kinky term structure over here. I don't know how to zoom this in. I'm sure there might be a way about it or how. I don't know if I'm sure. I think. I'm not sure of anything. So that kink is next Friday. We have the CPI and GDP, maybe the euro unemployment zone. All that stuff matters. I don't know. Okay, so this is what we talked about. Translation 102 week hedge demand is crowded tactical, even as 1 to 3 months starts to like normalize. That's what we looked at here. That's what I'm showing you here. The de-dollarization trade unwind versus reboot versus what we have going on right now in silver, and Bitcoin is kind of part of that same narrative. Google had good earnings, bad earnings. It went down, it went up. In this market, it doesn't really matter what you do, it looks like at this point. Qualcomm, disappointed. Locally, Gamma is thin to negative. Okay, so we had jobless claims like, I'm not sure what they were. Before the market, we had some oil, we had some We have Bristol Myers, Industrial. Afterwards, we have Amazon. Okay, so that was the straddle price when we were at 68.90, 53 straddle. What's the straddle now? Let's take a look. I like to look at E-mini for the straddle only because the SPX doesn't get updated great. So the E-mini straddle is 62 points from now. 62 points from here. From here. So 60 points from here puts us up here somewhere. And 60 points from here to the downside puts us down kind of below all my lines. So very little visibility here, other than we're going down until we see a reset in volatility or a news story or something. Something resets this. You ready, Chewy?
Yeah, go ahead. Let me share the screen. It's already on the Discord for those of you guys that follow. Let me pull this up. So pretty simple plan. Kind of what I was telling you guys. I'm targeting that 68.15, 68.08 area for a nice push up. I think if we get to 68.37, the bounce will be very short-lived. I'm not trading that until I see, or I'll trade that if we're back in a range, and then I'll trade it back to the ceiling. But I'm not expecting that to be the real bounce. I'd really like to target down here. If for whatever reason I like to plan both ways, we do start to hold above the range, I'm going to be targeting that 69.25 as the ceiling for today.
And that 69.25 was roughly 6,900 SPX. And your downside target is what again?
Let's call it 68.10.
68.10. So that's 68, 67.80-ish area. With 6,800, an intermediate stop. So 6,800 is about 25 points from here. 30 points from here. Is that where your intermediate level is?
68.37.
Okay, so that's 68.10 on SPX. Okay.
Yeah.
Which we might see sooner than you think.
Yeah, I think so too. If we keep pulling down like this into open, I think we're just setting up to rally. To be honest, so let's. If you're a bull, I'd want it to come down. If you're a bear, I'd want to kind of a retracement for an entry.
Okay, well, thank you. And we got to be on here live and show you guys what's going on, and we're kind of staking our claims on the record here. The value low, quote unquote, if you use that, what's it called? Dalton, that method. I forget what they call it. Whatever it's called, is all the way down here. Lagarde, I have known Kevin Ward for a long time ago. I very much welcome the announcement. Okay, so it's some bullshit. And let's see. So there's cross asset stuff going on. I don't have the ability to see what else is going on here. Dollar kind of looked like it was going to crack, and it didn't a couple days ago. I'll just use this for Bitcoin. Now remember, Bitcoin is highly leveraged. And so Bitcoin people having to get out is going to spill into the S&P. Let's see IWM, the best house in a bad neighborhood. That might be something interesting to look at. Meta's giving up its bounce. So somebody's asking you to post a Discord link. The Discord is through OptionsGelt.
I'll post it
Up
now.
here? Yeah, okay. And, wow, look at this shit. NQ is down 1% and counting even as we speak. Let me see what I got here. I might have a toy on this somewhere. Hold on.
Darsh, you posted on X. I don't know if the link will show on X. I think it's just my reply is just going to YouTube. If you go to, it's hard for me to send it here on X. I'll actually find the stream on X and I'll share it on that.
Okay. This is somebody else's secret source, not mine. DeFilippo, Kill Pips, he's got good stuff. And we're kind of near the bottom here for that. Let's see what he has for ES, probably similar levels while we're at it. Value map, okay, so he
For
has
anyone on
that
the fence, there is
68.
a free trial of the server too, just so you guys are aware.
Okay, well, let me kill this stuff. What's this? Regard, I give a shit. I gotta give a shit. Okay, and we're in this positive gamma, but again, with Vol doing this, there's really nothing you can say. It's just kind of sit and wait for that. Sit and wait for that Vol to reset. Might be time to start shorting VXX or UVXY coming sooner rather than later. We still have a war scheduled in Iran. We need to get that cleared up. And that's basically it. Okay, guys, I'm going to go. It's going to be fun. Today's not a bad day to go play with the goats or the puppies or catch up on your unread mail. Email. Nobody gets mail anymore. All right. Take care.
Goodbye, everybody.